Hello, this is Cryptolyze. I hope you are well on this Monday, November 6, 2023. It is with pleasure that we meet at the start of the week to talk about BTC, to talk about crypto, and it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We'll start with Solana and Render Network. That's it. Render has completed its migration to Solana, it's official, and so now RNDR is a crypto directly from the Solana ecosystem, which is quite positive because after a big giant like Helium, which abandoned its own blockchain to move to Solana, it is Render Network. So a protocol of which I have already made a video for you. I invite you to watch the video on the channel. I even put the link at the top right if you're interested, to understand a little bit the usefulness of Render Network and RRNR, and the benefit of switching to Solana, because it's not the only one. And the Solana ecosystem pleases more and more, despite the fact that it is not EVM compatible, and precisely the Solana technology despite all the difficulties they may have had in 2022. Whether it is the crashes, whether it is next the fall of FTX, which really hurt. It's a pleasure to see that tech is still so popular. We continue in the news with Aave, who is forced to put down his version 2, and who is forced to block certain assets from his version 3. We don't yet know exactly why, but a priori there is no problem with user funds. But given that Aave has had manipulation issues, that is to say that people have manipulated the prices of certain assets on the protocol and liquidity pools. Pay attention to the notion of bad debt that we can generate, and that's why I also think that they are on alert to try to block and anticipate any modification, any manipulation of the market. Let's talk about market manipulation. OpenSea is cutting its number of employees in half. It's really important. Currently, its CEO wants to change the marketplace, change the access that they are having. In fact, we must understand that the market of NFT platforms has been completely turned upside down by the arrival of Blur. Blur, which is a platform that has really transformed the ecosystem, given that they have just cut the fees by almost $1 million, being almost free to mint NFTs on Blur. And in fact, the OpenSea platform has a lot of difficulty reacting to this. They barely reacted at the beginning. They lowered their fees then, and then they moved on to something completely different. They have to launch OpenSea 2, which would precisely be a new concept of marketplace, a new concept for the company, but in the meantime we will still have the number of employees, which really hurts. For this week, on the macro side, we have quite a few things. We have on Wednesday 8 a speech from Jerome Powell, but that's about it, given that we will have after a few small speeches on Thursday too, but relatively few movements, that implies, on the S&P 500 and on the Nasdaq, which is rather positive given that we had a relatively very strong week on the S&P 500, with a week that brought us a tension candle, 5.55%, something which is enormous, which is classic in crypto, but in traditional markets, understand that it is something which is very strong, and therefore at a given moment when we are like that, we will have a breather, I think, or a lateralization, or potentially even a little continuity, and then a facelift during the week. I strongly think that we will have a crush candle over the whole week, which would be rather logical on S&P 500, also consistent on the Nasdaq, and therefore we also had a big upward acceleration. And what is interesting to see is that we closed weekly here, the DXY, therefore the dollar index below the lowest. So we have indeed made a facelift here. So we do have an impulse, an indication of a will bearishness of the DXY. So that means that we are going to retest the 104 lower here at a minimum, or even go for the 102. So there we have a reduction in tensions on the dollar, which will be good for everyone world. And also this reduction is mainly due to the reduction in the rate. At 10 years and bounds, in fact, US. It's true that we are starting to have a relaxation on this side. That means that we need less dollars in any case, because to buy US bounds we need dollars. That means that we hold of the dollar, And so this implies that we are starting to have a little relaxation, and which is rather positive. It will actually give some slack to a lot of things, and which also leads oil to a bearish breakout. Likewise, we closed below the previous candles, so we are in a bearish continuity process. We will have to break this 77 level, and I think that it will be strongly defended. It will really be a very important level in which I think that going below 75 really risks being very complicated, as I have already explained. There we have a confrontation between the consuming countries and the producing countries. For the consuming countries, we must not pass the 80 otherwise. We find ourselves in a problem of managing inflation, and for the producing countries it is the same, except that it is the opposite. We must not go below the 75. This is the profitability threshold in which they must in fact take their economy as a reminder to hold the price of the barrel to what they have done is that they have reduced their production. So this implies that if ever, despite the reduction in production, we find ourselves on a barrel which decreases at this moment, we will have a pressure economic which will be very strong on the producing countries. And that is why I am telling you that strongly defended in this area to remain in a form of channel in any case of lateralization for a certain time and a breath. What is interesting to see is that the various conflicts have had an impact, yes, but oil remains relatively sandy despite the geopolitical tensions that we currently have. Concerning BTC, we had a weekly week which was relatively flat. When we look at the CME at the Chicago Mercantile Exchange in weekly, we can clearly see that we have a candle here which is classic of an end of bullish acceleration that we find here, and therefore this is where we are going to enter a phase of lateralization. So here we are in the process of marking it. Are we going to stay several weeks? Is it only going to be a week? Is it going to be maybe even 2, 3, 4 months? We don't know it yet, but in any case, we are in an area to work on, and it is also very visible in terms of volume, being the crushing of volatility taking place. I think we're going to retest them at a minimum here, at this level in terms of volatility, so that implies that we're really not going to move much. At the short-term level, so we are in 4 hours, the pattern is being put in place. I think that we are going to have a very nice range which will take place, with here the establishment of the start of the range, the creation of liquidity which we clearly see in the middle of the range. Also we have a deviation which will in fact seek the higher liquidity we break. Bearish first impulse, but we are not going to seek liquidity. We are accelerating. And for me, we are going to have a second bearish impulse first, retracement second, to seek this liquidity there. In addition, the target is in the process of aligning here at 1 and 1-1, which go and look for the water there. And that would imply that we would make a diversion towards the bottom and then go back to the top of the range, and so on. So during the time we are here, there is a good chance that we will find ourselves in a classic lateralization. So we also have something else, and here it's much more wick-off. Therefore, market manipulation, in which we have a BC, an AR, an ST, a SOW, a UT. Here we have a very nice jack which has been carried out, therefore classic in fact of a distribution. And there we have a first retest, second, third to do after a UTAD. If we ever do a UTAD here without having taken the lows there, this mainly implies that we will really have the validation of a distribution, and we risk having a very strong bearish breakout at the UTAD level. Of course, we will have to wait for it to happen and see if we have a distribution at the level of this one. But in any case, we keep it in mind because ranging and lateralization are something classic. Yes, but this movement that we experienced recently is not classic. It's something that is carried by a rumor, which was carried mainly by perpetual and not spot. So we are careful, precisely, with this type of manipulation. For me, if we were to have a reaccumulation, we would have something which would be done in 2 stages, in which we would have a distribution, an accumulation which would take place a little lower, in which we would then start again upwards, agreement. Before such a short reaccumulation, and in which we would not go looking for these lows, that would pose a problem. We could even have something that is less aggressive, in which we would have a distribution here, which is on VCA, accumulation here, in these lows here, to start again upwards. There, at that moment, we will have a perfect pattern of reaccumulation of wick-off to start on the rise. So here we will have to monitor, because once again it is not validated. We are simply in a period of delay following a movement. So here we have uncertainty that comes to take place. Moreover, this can be seen in terms of this uncertainty because here we have the perpetual, which is relatively flat in terms of CVD, the spot which has become flat again. So this implies here that we have an equilibrium at the CVD level. Therefore, we have an equilibrium at the market level, which is being established. And therefore, that means that we are entering a phase of lateralization. In any case, in the short term, we are going to wait because we are in an hour. We have enough little movement to be able to determine it. Next to it, we have the total 3 gave us a very nice break in which we will certainly retest the levels of 412, 410. This implies that there we have an acceleration of alt which takes place classic BTC, which pushes PTC, which lateralizes alt, which pushes. So there we have great performances, and mainly Solana, and which showed the step, which showed the acceleration that we could have. And this is also seen on the ETH-BTC ratio, in which we have, well, Ethereum, which is also in the process of outperforming short term. There is obviously BTC with the work of the support zone, and a very nice rebound which is taking place. What does that mean concretely? This means that potentially we could have during this lateralization a small alt season which would last perhaps 2, 3, 4 weeks or even a month, depending on the time we would stay in this lateralization at the BTC level, okay? So we are really dependent on BTC. If BTC itself continues to grow, there is a good chance that the alt season will stop abruptly because there will be a reworking of liquidity towards BTC. And if ever, on the other hand, we have a BTC which push, there we will have the haul season which will stop abruptly and an effective retracement on absolutely everything. In terms of liquidations, we still have some good calls in the 34 zone. That's why I told you that we have liquidity here, which is on hold. We see it very, very clearly here in the liquidity pool, where we still have several millions waiting, up to 650 million, really very large blocks, below 34,000 up to, overall, come on, if we were to look, very quietly, 32,300. After here, we have a no man's land, which takes place. So this is really the period. This is the zone in which we made the breakout. Really the big acceleration. And we see that there is no one who is positioned here. This means that people are trading the short term and the long term. The medium term, there is no one who is trading it. This implies that no one has a real vision. And this is seen even more on the Kingfisher, where at the level, liquidations, there is no one in these areas, and there is no one until 39,000. So that clearly implies that there we have an emotional reaction from the market on the acceleration that we had. So we have to take that into consideration. It implies that we are going to potentially stay a little longer in the range while it is distributed, while we have new positions opening and closing. So for me, obviously, we find ourselves with very strong news, such as, for example, the validation of the BlackRock ETF, which would take place at the end of 2023, and not Q2 2024. It's over for today. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and we'll meet at 13:30 to talk about Phantom FTM.